Hi, good morning. It's Jason Sen from daytradeideas.com. It is Wednesday, the 23rd of October. We're looking at a weekly chart of British pound versus the US dollar. We looked at this on Monday and we were warning about this retest of the 2.5 year trend line and the previous October high of 162.60, and we were concerned that cable could top out again around this level, overbought on the weekly chart, daily chart not looking too strong either. Well, we've pushed on and we've hit that 162. Well, we actually got a 162.57, so we've retested the 162.60 October high, and we've rejected it as expected. Back below the trend line, this weekly candle already is looking quite negative, and if we continue lower, that's just going to emphasize the fact that we've rejected that that level. We've got a double top. It's all looking quite negative as it stands. We'll just flick onto the daily chart. Okay, so the daily chart here, you can see today's candle is very early this morning. We tested that 162.57, so we tried the 162.60, topped at 162.57. We've sold off quite aggressively throughout this morning already. If we were to close here, for example, we'd already be looking at a reversal day, a new high and a lower close. Just bear in mind we have now got a double top here, having retested that October high from 1st of October, I think it was, 1st of October. More than likely, therefore, we're looking like we're going to head back towards October lows around the 159.20, 158.95 area. That does look the most likely scenario over the next few days. Overbought on the daily chart as well as the weekly chart, and this double top really is what is the most important issue at the moment. If we eventually break below the 159.00 area, close below there, which is certainly a possibility over the next few days, the next target would be the 157.08 Fibonacci support, which ties in quite nicely with the August high, which was at 157.17. So that seems the obvious next target for this market. We'll have to review things there. We'll probably see a bounce off that level. That'll probably be enough in the short term over the next few days at least. So we'll review it when we get down there, but that looks like the most likely scenario. I'll just flick back to the weekly chart to see what happens if we do break above 162.60. Okay, weekly chart. So clearly if we break above 162.60, we're well through the 2.5 year trend line, which, just note here, we haven't managed to close above, even though it has been pierced, not on a weekly basis at least. In fact, I don't think even on a daily basis have we managed to close above there. Anyway, a breakthrough 162.60 and more importantly a close on a daily basis above there would then probably target the high here at 163.82, and if I'm not mistaken that is the high for 2012, so it's a yearly high. On the way we have got some resistance around the 163.00, 163.10 area. That would be our first target, but wouldn't it be at all surprised to see 163.80 test last year's high up there if we manage to break through 162.60. But as I said, I favour a move to the downside to at least 159.20, 159.00 over the next few days. Thanks very much. I'm Jason Sen from daytradeideas.com.